Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'll be facilitating this session tonight with Rob Roy. I'll introduce Rob here in just a few moments. First, we need to go over some housekeeping details. In the meantime, we are streaming on Facebook, Twitter, and YouTube. So welcome to everyone viewing from the live streaming services. It's great to have you with us. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, whether it might be a TradeFinder Live or Insiders meeting, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website to be read in full detail there, or feel free to take a screenshot if you like, but that's the main point to take away. So for this session, we do have a brief question portion right at the end of the session. Rob goes through his presentation and a few case study considerations at the end, and then with the time remaining, he opens it up to a few questions. So as I mentioned, we are live streaming on multiple services. So with the time we have remaining, we'll pass through the questions that we can. Please feel encouraged for those viewing from Zoom to use that Q&A window at any time throughout the session. And again, if we have time, you might be lucky enough to have your question selected, but if we don't get to your question, just know it has nothing to do with the validity. We just only have so much time. And also take that as encouragement to attend the insiders meeting when there's a 45-minute focus on questions solely for subscribers. So definitely take that as encouragement to attend then. We also have the chat window as well. So anytime that any support related queries or anything along those lines that I can handle, please feel encouraged to pass through. And also for interacting amongst other with other attendees, please be sure to change the "to" at the bottom from host and panelists to everyone. That way your comment or question will be visible to everyone attending the session. All right, I know we're not here to listen to me ramble on any longer, so I will introduce the man of the hour who we're all here for, and that's Rob Roy.
Hi, everybody. Thanks, Zach. Appreciate the introduction, and welcome to everyone that is live streaming, as Zach said, on all the various social media platforms. It's great to have you all and our regular subscriber viewers as well. If you are new to TradeFinder, here's a little bit of a rundown of what we're going to do. We're going to talk about not just the U.S. market, but international markets as well. I've seen highs from people all over the world there, so glad to have all the international viewers. We talk about some of the international markets as well. Every security that we talk about is tradable on the U.S. Exchanges. So if you're just interested in trading the U.S., don't tune out when we're talking about the international markets, because you can trade those securities on the U.S. There's some really good charts in some of the other markets. We'll review some of our trade alerts for our EWO subscribers. That's our alert subscribers at Elliott Wave Options, EWOtrader.com if you want to learn more about it. Then we'll look for some trade ideas for this week after reviewing the trade considerations from previous trade finders. And as Zach mentioned with the Q&A, whatever time is left at the end, we'll take as many questions as we can get to throughout the various social media platforms. That's it. That's how it works. So let's go ahead and get started in it. I'm going to make sure that y'all can see my screen properly. So here's the market. And as you can see, the 10-day moving average is catching up to the 50-day. If you've been watching any of the SPY updates we've been posting on YouTube, you know that I mentioned back down here. So they didn't know when this bounce was going to occur. The market was due for a bounce. But one thing I did know is that this 10-day moving average and the 50-day moving average would come together. They don't stay separated like this for very long. And often the 10-day moving average will almost always come up and hit that 10-day or that 50-day moving average. And you can see the various examples going back in time. Here we got a little bit above it, came down to it, a little bit above it, came down, touched it, got below it, came up and hit it again, a little bit above it. You get the idea. So, pardon me, they just don't stay separated for long periods of time. And they are coming together here at this point. So now we've had 6 straight days, going on 7 straight days now that the market has gone dead sideways, right underneath the resistance level at 420. Pardon me. And we know the importance of the 420 level there. We've talked about it numerous times throughout all of the webinars that we've done. and the postings on YouTube. And by the way, if you're watching on live stream and you haven't been to our YouTube channel, visit it, Elliott Wave Options on YouTube, and you can see some of our past recordings. And I think you'll be pretty impressed with the accuracy of the market calls that we've made. But when you take a look here, you can see the 420 is a major point of support and resistance. It's right there at 38.2% fib level. And now the 10-day moving average is catching up. Now, interesting, yesterday, the market opened on the high and closed on the low. Well, then today, I sent out, or this morning, before the market opened, I posted a commentary, and this is the kind of thing that our alert subscribers enjoy, is contact not only on the Thursday night meetings that Zach talked about, but periodically if there's something that I feel like is a good thing for our subscribers to see, we'll go ahead and send out a message to them. And you can see, talked about in Monday's trade, market stayed between the 10 and 50, opened at the high, closed near the low. And at the time of this posting, the futures market was showing that we were down. So I asked the question, the futures are lower in pre-market trade Tuesday. Will the market open on the low and trade to the high? Just the exact opposite of what's happened yesterday. And that's exactly what the market did today. So basically no harm, no foul. The last 2 days, nothing's happened. Yesterday, open on the high, close on the low. Today, open on the low, close on the high. Still right there underneath 420. So why isn't the market moving? Well, we have a big CPI report coming out on Friday that everybody is watching. It's possible that we don't do anything in the markets until that report comes out. So we may have 2 more days of this just sideways churn stuff until that report is released. And then we find out, do we break above this 420 level and move a little bit higher? As I've surmised that the markets break above all major resistance levels and all the media is like all clear. Markets are all above major resistance. So the bottom's likely in. That's when we worry about the market rolling over. But it is possible because we are at a major point of resistance. We're at a major fib level here. We've labeled a wave 4 that based on whatever happens Friday, we just roll over and start the wave 5. I think that's the less likely of the 2 scenarios, but both of them carry a lot of merit, and either one of them could play out. And so it appears like the market just wants to let us wait. So 7 straight days of nothing, and so maybe 2 more of it before we get to Friday's big CPI report. I did want to show you another interesting thing with the TNX. So here's the 10-year. You know, we show this for 10-year interest rates. Notice that yesterday, rates were up, market was down. Today, rates down, market back up. Are we starting to get back in lockstep with rates like we were back here in February and March? We kind of separated that for a bit, but maybe that correlation is going to reattach itself to where there's correlations that exist in the market. I've got it getting off thought process here, but there's correlations that exist in the markets that last for periods of time, but they don't last forever. And for sometimes it'll just go for a while, like the market moves with the dollar, or the market moves with gold, or market moves with interest rates. These kind of correlations kind of line themselves up and they happen for a while. People blame a lot of it on electronic trading, program trading, et cetera, that they're the ones that program them to, move in concert or in opposite direction, whichever, however programmed. But I think that the equity market moving with the bond market makes a lot of sense. And so if we do start to get lined up again with what's going on rates, I think that's pretty normal. And if we look at the dollar, you can see kind of a doji on the dollar here, pulling back at that wave 4 level, right at 27%. So not far from a 23.6% corrective level. And as I've shared with our Elliott Wave Options subscribers, Ralph Nelson Elliott himself didn't really count the 23.6% fib level. He mentioned it. He knows that it's a fib level, and so you have to watch it because it is a fib level. He's a big believer in Fibonacci ratios and retracements and extensions, et cetera. But he really wanted to see, for a legitimate corrective move, 38.2%, so the next fib level. But nonetheless, you can see what's happening with the dollar. It is holding at that 23.6% level, at least for now. A little bit move back to the upside. I don't really think the equities markets want to see the dollar take off again. Perhaps it does, It's trying to, based on today's move. And then you can see back above the 10-day moving average here. And the 10-day moving average has gotten in the neighborhood of the 50-day, but there's another scenario that I talk about, that separation between the 10 and the 50-day, 10-day way above the 50-day, not going to last, and it's coming back down. That's just a trading rule that you can file in your notebook and apply to whatever technical trading system you're utilizing. Two main rules with the moving averages. Most of you have heard them before, but those of you that are viewing on one of the live stream social media services may not have heard this before. If it's your first time watching us, welcome for one thing, but two rules that I go by: no security in any time frame gets very far away from the 10-day moving average. That's a rule. And the 10-day and the 50-day don't stay significantly separated for long. They will come back together. Those are just two trading rules. So something that you can keep an eye on. Our subscribers talk about how they've applied that into their trading as well. So that's basically the US market, the index, and the dollar. Let's go through some international markets in case you're interested in seeing what's going on around the rest of the world. So we'll look at Australia and Canada will come next. And you can see a little bit of a move to the downside today, although back up to near the high of the day. And so this is the EWA. We switched that from the XJO at the request of our viewers. And so this 25 level is really important. So we had broken above it, but as we talked about in last week's insiders meeting, which we do every Thursday night for our alert subscribers, as Zach mentioned in the intro, we have an extended Q&A at the end there. We had this break up here to the upside, and so it was going to be important to see if we got a follow day on Friday. Well, we didn't, and so we're back here, and that's another thing that we talk about. If you break a major moving average, major support resistance level, break out of a triangle, etc., the first day doesn't really matter. You have to have a second day, a follow through, a confirmation day, and so we didn't get that. So we're still right here, 25, but it's a pretty nice move off of the low, so you have to respect that. And now we have kind of a pretty decent ascending triangle that is formed there on the EWA. So when you see that, the first thing that I want to look at is where's the ADX? How low is it? And the ADX is getting down there as well. The ADX is one of our confirming indicators, part of the DMI. That's really one of our confirming indicators along with Elliott wave. And I like to see that ADX when we have heightened levels of volatility, which we do now, break down below 15. If volatility is lower in the market in general, as shown by the VIX, then I'd like to see the ADX down at 13 or less to look at entering a potential strangle or a strategy that can break out of a triangle pattern. We're pretty darn close. We're not quite there, but we're pretty close. And that might be an interesting looking strangle there if the pricing of the options was good. So let's take a look at Canada. I'm going to look at the VIX here in a minute. We'll get a better idea on potential breakouts. Now, Canada, we also had the EWC as one of our alerts going back to May 3rd. I'm going to show that to you as we go through the rundown of the case study considerations that we've done in past TradeFinders. So it'll give you new viewers an idea of what we do here on Tuesday nights. And our target price was 39. So you can see we're almost there, which would mean that would be time to go ahead and take this one off. I'll run through that real quickly again when we go through the updates. But you can see right here that, boom, there's that 39 level. Now, the wave 4 in this 5-wave impulse pattern is at 68%. It's getting awfully close to disqualifying this 5-wave downward pattern here, impulse pattern, but it's not there yet. If we can get above 39 on the EWC, then it'll likely disqualify this 5-wave pattern, and then we look to see what the next pattern is, but it's still there for now. And the EWC has to break above 39 for that pattern to become disqualified. So it's a major point of resistance. So I'll see if it's able to go ahead and do that. Looking at our market on the diamonds, you can see that here we are right above 330, just sitting there exactly the way the SPY is doing. So nothing significant happening here, just boom, right there The key, though, is that the diamonds are back above resistance where the SPY is still below it. So we have broken above it. As I mentioned numerous times, the DIA was the last market to break below support. It's the first market to break back above resistance. So we're sitting there at a 45% wave 4 correction, which means the wave 5 is still firmly in place. Can we break from here? I think the same thing is occurring. I don't think that's rocket science. Doesn't seem like anybody wants to do anything until Friday when the CPI report comes out, because for the past entire week, nothing has happened other than intraday back and forth in the US markets. Well, let's take a look at the Qs. Let's see if there's any more activity there. I know everybody likes to look at the Qs, and same thing. Maybe a little bit lower high here, but nothing really significant. Waiting to see if the Qs can break back above their resistance level at 320. So not much else to talk about there. You know my thought process. I've said it numerous times, and I said it here as well, that I do think that a scenario that just makes more sense to me, because the market just doesn't tend to do what everybody thinks it's going to do. And everybody can see these levels that I'm showing you. I'm not showing anything that's magical here with these support resistance levels. Now on the IWM, thing that happened today is we did break back above 190, barely, closing at 190.9. So, but it counts as a close above it. So same thing that we were talking about with the Aussie market. Can we get a follow through, a confirmation day? Note we also have a pretty nice ascending triangle here on the IWM, which means something is getting ready to happen. Which way are we going to break? Are we going to break back above 190 and go back into that trading range that we have between 190 and 210 for the first part of 2022? Or is that 190 level going to hold and we break back lower and perhaps set up a new trading range between 170 and 190? Well, we'll find out in the next couple of trading days, but probably won't be before Friday on the small caps either. Again, everything waiting to see what's going on with that report. All right, let's look at Bitcoin. I know everybody's anxious to see Bitcoin as well, and pretty nice move back to the upside there. And interestingly here, you don't see this happen very often, where you have a triangle pattern, and it was, you could call it a quasi-symmetrical, but more of a descending triangle pattern, break up, come back and test it, and then just kind of sit there. And it looks like it wants to go, but maybe even Bitcoin isn't going to do anything before Friday. But it's really different here, closing on the high yesterday, closing on the high now. And I understand, I know it trades 24/7, I got it, but we have to show a snapshot here. So that's what this software program does, which by the way is called Profit Source. If you're interested in it, it's developed by the folks at hubb.com. I think it's the best daily wave software program out there, and I've tried all the ones that I know to exist. But here we are back up, beating our head against this 32,000 level. That may be what's holding the breakout from occurring. But if it can get above 32,000, I think we go back to 36 really quickly. I think Bitcoin could see 36, and if the market does break above resistance, as I think it might, following any kind of decent news out of the CPI report. I mean, that's all it has to be, is decent. Doesn't even have to be a great report to spur the markets above resistance, in my opinion. And then I think Bitcoin hits that 36,000. Now, that's going to be a whole different scenario. Can it get above 36,000? I don't know. You can see the wave 4 is only at 32%. So even if we break up to 36,000, we're still in a very well-formed 5-wave impulse pattern to the downside on Bitcoin. And we're in the middle of what everyone's calling a Bitcoin winter, or a crypto winter. Again, waiting on the next halving program that occurs with Bitcoin sometime next year. I think it's towards the end of next year, once that occurs. All right, so let's look at INDA for India, and we'll look at Germany, and then we'll move into case studies. India still just kind of hanging around down here at this level. It looked like it was joining the party. Again, this was back on Thursday night. We're breaking the upside to see if we could make a run, try to get above 43 on the INDA. Same scenario, needed a follow through day. Also the same scenarios with Australia, we didn't get it. And so sitting here waiting to see if we can break back above 43. So right now we're in a trading range on the INDA between just 40 and a half and 43. If you want to round it up, you can call it 41, but we really are trading down here at 40 and a half. And now it's been requested to, instead of looking at the DAX, again, try to look at something that's a bit more tradable. So we'll look at the EWG for Germany, and you can see this wave 5 with a 213% move to the downside. Slightly different pattern than the DAX, but not much different. Been pretty ugly into recent terms, but this has a little bit of the scenario from India where we came down here and tested that wave 5 low. It's just the EWG has moved a little bit further to the upside than the Indian market has. And that's okay, because the German market has just been, the DAX has been destroyed for the past year or so. It's just been awful and just moving down. So getting a bit of a bounce is warranted. And then we want to see if it can get above this 28 level. That's going to be key. Note that the 10-day moving average did give you a positive cross there, the 10 crossing the 30. That's another one of the rules that I look at when it's in our technical trading system. Old floor traders, market makers used to talk about how they watch the 10-30 cross for intermediate term trending all the time. And then the 10-day is also at the 50-day. So that could be considered a negative. The gap's been closed between the 10 and the 50-day on the EWG, and that occurred before we got above 28. So is that 28 resistance going to hold, or are we going to move higher with that 10-30 positive cross, saying that maybe the uptrend continues? If you look at the DMI, it's really not telling us anything yet. There is separation. The buyers are in control right now, but not significantly. The ADX is kind of moving up, but it's got to get above that negative directional indicator and get above 20 before it matters. So not there yet. So not getting much of an indication there on what the likelihood is of breaking above 28, but that's your key level to watch if you're interested in trading the German market. All right, so I did want to share with you, we looked at Snap a couple of weeks ago. That was one of the ones that I let you all vote on as to whether or not you wanted to look at MOS or Snap for our case study consideration for the week. And it was kind of a 50-50 thing. But we did do a time strategy trade. That's our new AI-based time strategy. So those of you that are watching on live social media services, if you haven't seen this before, you can find out more information about it at our website, ewotrader.com, or on our YouTube channel. But it's an AI-based strategy where stocks that have had a big drop, AI with over 300 data points tells us if it's likely to stay in a trading range. So we use strategies that are designed to profit in a sideways move, which now allows us to profit from a drop in implied volatility and a drop in time decay. So if time decay is occurring, which is normally an enemy to those buying options, now we can turn it around and become profitable. So I think everybody's aware of the big drop that Snap had. It was well televised. So our AI said, hey, this looks pretty good. And so there was the entry. There was the big drop between earnings drop. So doesn't have to always, stock doesn't always have to drop on earnings. So you can see the move down there and looks like it wants to stay in a trading range, and it did. And so our exit was sent out actually today. It's when we just closed out today. And you can see that we had a really tiny day there today, and it just stuck right on our projected level of 15, just dead on that with a very low day, which allowed it to profit a little bit more. I saw some fills go through at 71 cents, which would have been a little bit better return, but over 30% in 12 days on a sideways trade. That's pretty cool, isn't it? So that gives you an idea of our AI-based strategy. And you may be hearing, so I've been on CNBC, everything else, of how AI is going to be infused into technical analysis. That's the future of technical analysis. Well, we already have a strategy based on it, and we're utilizing it in our directional trading now, or in the process of integrating it in there. I should say it's not done yet, but it's in the process as we speak. So we feel like we're kind of on the forefront of this new age of AI-based trading technology. All right, so let's go back to the charts and we'll take a look at some past case study considerations. We'll see if we can find one for tonight, and then we'll look at questions with whatever time we have left. Food's back. Remember when we were talking about how we didn't understand what was going on, why all of a sudden food was out of favor? It made no sense, because if you've been to the grocery store, you know the prices of food haven't gone down at all. Here's what it looked like when we were first looking at it here, and then we had to move down, but look at that move back up today. So big drop here, big move back to the upside today. Hasn't labeled the wave 4 yet. Maybe it does, and maybe we move into a wave 5 impulse pattern to the downside. Perhaps there was some short covering going into that CPI report, waiting to see what the CPI, it'll be the X food and energy part of the CPI, which makes no sense, but that's another day's subject. The fact that they look at an inflation indicator that doesn't count food and energy, which right now it even looks more ridiculous, because those are two of the highest areas of inflation that we have: food and energy, putting gas in the cars, et cetera. Anyway, again, I can rant on that for long periods of time, but right now you can see we're up here to the wave 4, hasn't labeled it yet. Can we break higher on a good CPI report and then move back up to test that 145 level? I think that's extremely likely if we have a decent CPI report on Friday. I think it turns and runs right back up there. We actually had, and I'm going to share that with you next week, but we actually had an alert on DAR, which is also in the food area. We had a bit of a drop there too, but we adjusted it and had a really nice return. Big move to the upside on it today as well. Allowed us to make a nice gain, and that was in our impulse or directionally based strategy. So I'll share that one with you as our example of our alert service next week. But as we continue on here, RS, see, we were looking at that back on the 3rd of May. Also had a little bit of a pullback there, but we're almost right back to where we were. A little bit of a triangle here, and we have an upside break today. So we actually sent this out as an alert to our alert subscribers as well, and we adjusted it when it moved lower. So far, working out really well on the adjustment here, but we want to see if we can get that follow through a confirmation day, right? Same scenario. One day doesn't mean anything. We're above the 10-day moving average. We got to get that second day. We got to get the follow through or confirmation day. We'll see how that plays out. Westlake was one we were looking at to the downside here. Should make its way down to 115 at some point. Well, what I wanted to show you here is if you wanted to adjust this, I mean, it really hasn't done much. It's just kind of hanging around. But look at that triangle. It's a pretty well-formed symmetrical triangle. So if you were following this one to the bearish side, then maybe you want to consider going ahead and putting on a triangle, because there's that ADX diving down. You can see how low it is. It's down nearly 11. So that's pretty interesting. That's a really low ADX when you have an elevated VIX. And I said we'd look at the VIX. We will look at the VIX before we move to questions. But that's pretty nice symmetrical triangle. Perhaps it breaks to the downside and goes right to the 4, which is what the 5-wave Elliott wave pattern would lead you to believe, because we're right there in the middle of that tap box on that wave 5 high. But if it breaks to the upside, it breaks to the upside. One thing I've learned over the years with these triangles is you don't predict a direction. Any of the triangles, ascending, descending, symmetrical, they can all three break in either direction. I know there's a lot of education out there that says an ascending triangle breaks higher, a descending triangle breaks lower. There's not the evidence that proves that. They all can break either direction. Looking at HCO, this is one we looked at on the 17th, and it went lower, back to the upside, pretty close to where we entered. So not much going on that one either. And then 2 weeks ago, when I gave you the look at Mosaic or Snap, and the voting was pretty much even between the two, and Mosaic really hadn't done anything. It's just hung around, stayed at this support level, maybe just waiting for the report as well. A little surprising that there hasn't been much more of a movement there, but look at this descending triangle that's forming here on Mosaic. Pretty decent with all that support there, just under 60, and then that series of lower highs. So we want to come over here and look at the DMI, but that ADX is not low enough for me to want to consider doing a strangle. And you can say, well, the pattern's great, and that's true. And I can tell you that triangles, stocks in triangle patterns do not need a low ADX to break out. But what I'm also saying is that oftentimes you can form a triangle and it breaks up, breaks down, forms a larger triangle. And by the time it gets to the real legit breakout, which normally does occur, a lot of time's gone by, and that can be harmful in a strangle when you're buying a call and buying a put. So the ADX being low tells you that, hey, we've been consolidating for an extended period of time. It's more than likely that we're going to break out in the near future rather than longer term. So it is one of our guidelines and rules that we look at for putting on a strangle. So I wouldn't want to do that right now with the ADX that high, but it could still break out either direction. And then I already showed you snap. That's what it looked like. We were saying, is that going to go up and fill the gap, or is it going to go down or sideways? Our AI said it was going to go sideways, and the AI was right. It's exactly what happened. So again, an evidence of our AI-based time strategy. And then last week, we looked at JD. The news had come out that China's coming out of their lockdown, and the government's backing off really hard now, the rhetoric. So really interesting. As harsh as they were, now they're backing off, and who knows exactly why, but that's what's going on. And so you can see right here at 55 was where we were. We looked like we were trying to break to the upside. Did it continue? No follow through day the next day, and then a break again, no follow through day. And then yesterday it broke higher. Today we get the follow through. So the follow through day today looks like JD wants to continue and run higher. So if you didn't do the strangle, which is what we looked at as a case study consideration, you could take a shot on this one on a long position due to the fact that today was a confirmation day. And I know that if you get out on the internet and you start researching confirmation days, there's a few different scenarios. Some of them don't need it to be 2 consecutive days, but it's the way I was taught. It's the way I've always looked at it. And it's the way that in my experience has worked the best is if you have a breakout day, the confirmation day needs to be the next day. And you need to have a close that's either higher if it was an upside breakout or lower on a downside breakout. So the close has to be in the same direction with a new high or low. And so that's what I talk to our subscribers about. That's been my experience. Been around for 25 years doing this. So I've seen a chart or two. Not claiming to know everything. I certainly don't. But have seen a lot. So this should move up to test that wave 4, and then that's when we'll find out, all right, does this move out of the China stocks have any legs or not? Because it's going to have a difficult time there with that previous wave 4. Could it break it? Sure it could. You can see the 10-day has crossed the 30, so there's that bullish cross. But again, the 10-day hitting the 50-day as well. So that little gap there has been rectified. So now does it continue to move up with the 10 crossing the 30? I do think it looks like it wants to go up and test that previous wave 4, and then we find out more from there. If you want to get excited about it, look at that DMI. Now the ADX hasn't broken 20 yet, but it has broken above the negative directional indicator. There's really good separation here between the 2 directional indicators. So boy, if that ADX breaks above 20, not only could this test that wave 4, it could be off to the races. So you could have a pretty good directional trade to the upside there if you didn't look at the strangle side of it. All right, so that brings you up to date on the case study considerations that we've looked at in the past. Let's see if we can find one for tonight. So I'll go over here and look at the pre-computed scan, see if there's anything that shows up. And this is something that's included if you have profit source in your Elliott wave options Alert subscriber, you get all of these pre-computed searches for free, all this stuff under Elliott Wave options. And the one that say EWO in front of them are actually my searches. So they include those. Our subscribers look at them, and then they can ask questions to me. Our alert subscribers have direct access to ask questions to me if they'd like to, not just on Thursday nights on the live session, but through email anytime. And if they have a particular one they want to look at, then we can converse about it. I can't give individual investment advice through email, but we can certainly chat about technicals, etc. Now you can see there's 3 impulse stocks tonight, which is interesting. The fact the market really hasn't done anything to the upside, but we still have 3 that we could look at. So just understand that right now, let's just go ahead and bring the VIX in before we come back and look at these, because that's going to determine whether or not we want to consider another strangle as we did last week. And you can see, just like last week, the VIX bounced up after last week, but now it's back down again. And so don't even want to entertain doing a strangle with the VIX above 25, but it did break down today. We did have this triangle, and there was a confirmed breakout of the VIX in this triangle. And yeah, patterns like that work on the VIX as well. So it does seem like the VIX is wanting to go down and test that 20 level. If it does, then hey, that would support my scenario, I guess, that I've played out of all the major averages, all the major markets moving above the resistance areas. And then you're going to get all that hoopla from financial media outlets. And the coast is clear. We're all above resistance now. The bottom must be in. All that kind of stuff will come out if the VIX goes down to 20 and the market breaks above those resistance levels. So we could look at a strangle. Well, let's go look at these 2 impulse moves. First, travelers in the assurance area. We have an alert on CI, Cigna, which is also in insurance. And we came down and made this wave 4. We'll see what the DMI looks like. Yeah, it's not as exciting as I'd like to see. It may be forming. There's been an awful long base there on travelers, as you can see right through here. But I want to see that ADX curl up above 20, not just above the 2 directional indicators. So you might be saying, well, why did it show up on your search then? Well, if the ADX is moving up and it's above 15, it shows up on my search because I'll put stocks on a watch list. If you just say above 20 and it's broken out, you might get some at 25, 28, etc. But I like to see some where the DMI is forming and then triggers so that you can get in right at the moment where the DMI shows that it triggers and the Elliott wave pattern is ready to go. So in this case, it would be the wave 5 to the upside. So if I have to watch one for a few days until the DMI fully triggers, that's great. And so I've got a whole list of stocks that I watch each day that are in scenarios like this, but it just means that it wouldn't be an entry today. Next week could be a whole different story. Rio, man, is just Rio Tinto is such a blast from the past for me. I used to trade this all the time. And boy, that looks, that's going to be a tough one to beat there. Even look at that oscillator. But there's your cross, the bullish cross of the 1030 moving averages. So we're not in a 5-wave impulse pattern. We're in a corrective pattern, which means we are likely coming up here to this previous 5 to test that area. A tiny bit overbought today would be the only negative. You can see closing on the high, little bit of separation from the 10-day moving average, but boy, that looks good. And look at that DMI, the ADX is above 20 on this one. That's about as good as it looks. If you're curious about the indicator, the DMI was created by Wells Wilder, who also created relative strength, RSI. He made them both. He created both of them. Just so many people look at relative strength. I'm just more of a fan of the DMI. Not as many people look at it, which I like, but I've just found it to be a bit more accurate. So when you look at this, if you want to see what you want a good signal to look like, that's it. That's a signal that, hey, there's strength to this trend and it's likely to continue. That's what that means. So I do think there's a really good chance that Rio runs up to 85. So I don't know how we're going to beat that. In the other one, that's probably going to be our case study for tonight. But let's look at LKQ. I knew I was going to mess that up. And then we look at the DMI here. And it's not quite set up there either. But again, the ADX curling up, but not quite above 20. Something to watch there, though. That's in a wave 3. That goes on the watch list as well. So there was 3 good ones, 3 good results on the search. 1, Rio, that's ready to go now. 2 of them that could very well trigger within the next few days. Maybe they wait till Friday like everything else does. But nonetheless, good chart setups, just not quite ready for entries yet. Not quite ready for prime time. So we're going to put down our case study consideration for tonight to be Rio, and the expectation of it moving back to the upside, maybe not quite as affected by whatever the CPI says, but movement out of RS that you saw today as well. So in the same space. So there we go. That's it. Rio, used to trade Rio all the time, years and years ago. It was one of my favorite stocks to trade. So that's why I said it's a blast from the past. All right, with that, Zach, let's open it up to questions.
Absolutely. A little extra time this session, so I'm sure everyone is pleased with that. Interesting to have Rio as a case study consideration when usually it's Neo. So nice to have a switch up there.
Oh, wow, I see what you did there.
I couldn't resist.
Not even close to the same thing, but okay.
No, stock wise, no. But
let's look at Neo though. While you said that, let's just go ahead and look at that, because I wouldn't be surprised if it's in your list of questions. But with JD breaking up, oh, is it? I figured. So with JD breaking up, we should probably look at Neo as well, see if it's, across the board with the China stocks. And it's right there at 20. You can see the resistance level sitting right there. So can we break above that level? Really nice looking symmetrical triangle here. Where's that ADX? Because that would be a great triangle if the ADX isn't low enough. It looks like it wants to break above it because the ADX is curling up. It's between the 2 directional indicators. So the whole DMI is giving a signal that it's likely to break above 20. Remember what I said, that I don't ever pick a direction out of a triangle. But the DMI, if you wanted to rely on that and take a speculative shot at it, I think you could take a long shot, right? And get it long shot, take a shot going long on Neo. Or if you want to be a bit more conservative, wait and see what direction it breaks with the follow through. And then, so aggressive, you could go long now, more conservative, let it pick its break and have a follow through day, and then enter whether it's long or short. So interesting. So yeah, offhanded, good one to look at there, Zach.
Absolutely, and it was a question from George as well, and the next symbol from George was Amazon, and there's been a couple subscribers from YouTube asking for Amazon as well. So we'll just
figure split, big old split. So we have to get the chart split adjusted here. See if and there we go. So 20-for-1 split. That's crazy. You don't see many of those. You don't see many 20-for-1 splits. Now, the issue that you're going to have when you go through a split that big, now I know people are probably used to saying that, oh, well, a split is good. Stock usually moves to the upside. The stock gets too expensive. They split the price. It makes it more attractive to more people, not just those with big accounts. And so then the stock tends to run up because it brings more buying in, as everybody's like, oh, now I can buy some shares of Amazon because it's not trading at, 2,700, it's trading at 120. But the issue is when you have a stock split that high, so many shares of people that own shares, they have so many now that it's tempting to sell some of those shares and take the gain, if there is a gain, depending on when you bought the stock. But some selling comes in when you have a split that big. Oftentimes, if you have a 2-for-1 split, sometimes even a 3-for-1 split, it'll immediately jump up. That's just not enough to generate the kind of selling that a 20-for-1 split will. So people that have all those extra shares now, they sell off some of them, bring some money back in, take some profits, whatever. And so when you have a big split like that, although, from a intuitive common sense standpoint, you think, wow, it should really rally immediately now because it's so much cheaper than it used to be. But you have to face off that selling first. And so there's a little bit of a period often where it can go sideways to down before it moves back to the upside. But with all that said, as background, the key is going to be 140. If it can get above 140, then Amazon could be back off to the races again. I still feel like maybe it needs a little bit of a break. And you're going to have to go through, the ups and downs of the selling. And I think that some of that volume there is detailing what I was explaining. So I think there's going to be some choppiness over the near term, and then we'll find out, what's going on in the market itself. Does it bring a whole bunch of buying in after that selling is taken care of, and can we get above 140? But right now, I would say that you just kind of got to sit. There's that gap that was in the big chart too, still there. The gap, the chart before it split. I mean, so I think that you just kind of got to hang on there for a little bit, be patient on Amazon, and wait and see if it can get above 140. It could run again. If it does, and I know you're like, well, it's at 123. That's 17 points away. That's a big move. Okay, well, I still think that it's just a watch and see right now. It's a difficult chart to figure out. The wave 4 is only 34%, getting pretty close to 38.2. The 10-day moving up to the 50-day, that's your best friend there. That hasn't occurred yet. But I just think that Amazon is a wait and see right now. That may not be a popular analysis, but that's what it looks like to me.
Absolutely, and we will wait and see. So next up from YouTube, Jess would like to look at, well, ask if Rob can take a look at long-term wave count to gain perspective.
On what?
There wasn't a symbol specified. It was at 23 minutes into the session. So
maybe the S&P. We'll look at. We'll talk about the long count and look at the long count next week, and I'll spend some time and explain what that means and go through it. So I'll make a note of that to look at that next week. So gives you something to stay tuned for next week.
Absolutely. And so we'll just go over to Silver's question from YouTube. So Silver would like to look at silver and gold.
Yep, I figured that was coming too. So we'll look at the SLV, which is the ETF for the actual metal, and kind of just hanging around. Didn't really get the same kind of a burst today that Rio or RS did. Just kind of hovering around this area. You can see a fairly decent, not very large, but fairly decently formed ascending triangle here. It's only 1.5 wide, so it's not going to be that significant, but a break from 1.5 to the upside would start to get us into that 22 area. So it does look like something's getting ready to happen finally out of silver. It's kind of interesting to me that with the dollars move lower, there's been just a little drift to the upside in the metals. I really kind of thought that that would give them a bid. I think we talked about that back here when we run into the upside and look like, okay, there's finally a bid in gold and silver, but it just ran into resistance at 175 and boom, bumped its head there and it can't get above it. And you can see, just like with silver, there's a bit of an ascending triangle forming here in gold. So does that mean it breaks to the upside? Maybe, but remember, it's not because the ascending triangle is saying it's going to break to the upside. It's just a triangle, but it could break to the downside as well. It could break either direction. And based on that chart, let's see where the ADX is here. It's getting there. It's almost to 15. It's right close. So that might actually be on our search here soon. looks like there's a little gap in here that we could have a couple more sideways days, and maybe that plays into Friday as well. I don't know if it's going to affect them. I mentioned that I wasn't sure that Rio would be that affected. Maybe it will, but a couple more sideways days could have a really good looking strangle there. It's a little more expensive, so it'd be an expensive strangle, and it's not that large of amount. So it's not something we would do that would send out to the alert subscribers, because we want a 10% move out of the width of the triangle. So if you look at the high there at 175 and the low is like 167, so that's only 8 points on a $175 stock. You want to want more like a 17-point move out of it. So it's not a large enough strangle for us to look at, but it will be interesting to see what direction it breaks, and then you could put on a directional trade from there. So both gold and silver in smallish but pretty well formed ascending triangles. So I don't know, it's Friday the breakout day, maybe.
We shall see. So next up, we'll transition back over to Zoom. David would like to look at EWZ.
I haven't looked at Brazil in a while, and Brazil made a nice move to the upside on that wave 3, 75% wave 4, so almost disqualified it, but not quite. So it's still intact. Down day today, which is interesting. Same thing with Australia as we looked at, but sitting right on where it needs to hold. So right there's support at 34. If it can hold that, then it's got a chance to move back to the upside. But if we look at the moving averages, yeah, I figured that with that move down today, we're below the 10. So we're right at support. We're right at the 50-day moving average. So this one's pretty easy. 34 is make or break for Brazil. If it can hold this, then it's got a chance to run up and hit that wave 5. If it breaks that level, then it's likely coming all the way back down to this wave 4. And not just because it's a wave 4 pivot there, but because of the fact that the move from the 4 up to where we are now was just straight 45-degree angle. And that means that there's nothing to stop it on the way down. There really wasn't any sort of a pullback on the way up here. So if it breaks below it, no real resistance on the way back down to 30. So really key that the EWZ holds 34. And we just have to wait and see. If it does, can get back above the 10-day moving average, maybe it can go on a run, but it's got to do it first, and it's rolled over so far. But 34 is the key number.
All righty, thanks for that, Rob. Another symbol from David is VGK.
Okay. David likes the international markets. So here's Europe, and see the wave 5 went down 65% after a 61% wave 4. So we have to wait and see if we get the 100% extension. Maybe not right now. It came down very similar to what Australia did with the doji down here at the very bottom, but with Australia, you had almost like an island there, gap down, gap back up on the EWA, but sitting right here at 55, we're bouncing back to the upside. A positive 1030 cross there above the 50-day moving average. Can't give us the follow-through day though. Look at that. Break above the 50, no follow-through, back down. Break above the 50, no follow-through, back down. Break above the 50 again today. So it's just kind of following along with what's going on here in the US right now, I think, with all those days in a row. We're just waiting to see what's going to happen with that CPI report on Friday. So interesting to see that not just the US market is looking at that, the international markets are waiting for it as well, especially Europe. So it's right in between whether or not it rolls over to go make a new wave 5 low or marches back up to the wave 4. Probably what happens Friday tells the tale here.
Yes, indeed. So moving back over, Bradley from Facebook would like to look at BRK.
V as in Victor, RK?
B as in Bravo.
All right. not sure which exchange, but I'll assume it's on LSE. Kind of a decent looking triangle forming there. It's not in an impulse pattern. So if you're wondering, well, why doesn't it label the corrective patterns? I have it turned off. The software will. I like to look at the corrective patterns just with the plain eye without the ABCs on there, and then look at using zigzag and the triangle tools, etc., that are included there that I can manually put on there. But if you wanted the ABCs labeled, you could. And so when you don't see a 1, 2, 3, 4, 5, currently it's telling you it's in a corrective phase. And the corrective phase here is pretty easy to see. It's in a big triangle. So looking there, right there at the 23 level, let's see what the ADX, it's not quite low enough yet. Oh, that's an awfully good looking triangle though. It's almost there. It's at 16. It doesn't have much further to go before that would be pretty interesting. I don't know what the options look like on that, but that's a pretty nice triangle. It's really clear to see where the recent high and low pivot points are. So, the low there, the high there. Now you look at the difference. So 26 all the way down to 20. So it's a 6-point wide mouth of the triangle, and 23. So that's way more than 10%. Even if you look at 80% of that, which we do, 80% of the mouth of the triangle for the breakout, plenty of room for that to move. So, gosh, you look at that and say, if it just would go sideways another day or two, we could have something. But if it does, or if we wait another day or two, it could break out because it's right in the point. But if you want to just make sure that ADX goes a little bit lower, hang on a couple days. But if you wanted to go ahead and jump the gun and do a strangle there, I would understand, because that's a large triangle and fairly well formed. Lots of touches on the line there.
Absolutely. And although it turned out to be a good chart to look at, Bradley came back and said Berkshire B, not BRK. It was the intention of the symbol, but still worked out. It's a good find.
So BRK.A is Berkshire. And so down here, basing really significantly. Yeah, we did find a good struggle on that anyway. But so right here at 500 and or 470,000 there. This is crazy. But 72% on the wave 4 corrective level. So that wave 5 pattern is still intact, sitting on support. So this one's pretty easy. If you had the account to take a shot at this, then you could go long this and see if it bounces off this support level and goes up to the wave 5. But if it breaks that level, then it's an easy move to the downside here. So if it doesn't hold there, then you're coming down here. So that's going to be the key. If it can hold right here at 470, then it can make another run to the upside. If it breaks that level, it's coming down to 420. That one's fairly clear cut. Don't have a positive 1030 cross yet. The 10-day has not caught up to the 50-day though yet, which is likely. So perhaps at least a little bit of a bounce off this support level is warranted. And look at the DMI, and it's telling you that the strength of that downward move is over, which is what this consolidation is telling you as well. We had the ADX get up to 40 and break down below. So it could reemerge, but for now, the selling has abated. So it's going to be interesting to see, but that one's fairly simple. Again, if you had a super large account and you wanted to do something with that one, take a shot at it.
Absolutely. And see, we are at time. So as always, I'm happy to stay on as long as you are. You just tell me.
Let's do one more.
One more? All right. We'll do Daniel or Danielle from YouTube. At what price do you think oil will reject down?
This is a good one to finish on. That worked out well because I did look at oil earlier. and oil has just been screaming. We do have a strangle on that triangle for our alert subscribers, and it just continues to break to the upside. So the question was, where do I think it could turn back? It, at this point in time, looks like it wants to look at that DMI. It's confirming their strength to this move. So much to our chagrin, much to the pain that we're having at the pump when we're putting gas in our car. It doesn't look like gas prices are going down anytime soon. We just broke above that wave 3 right here. And so I think the answer to the question is it's highly likely that USO goes up to 100. And hate to say it, but that's what it looks like. Maybe it turns back just short of that, because at this point in time, getting to 90, a lot of people have that same belief that I talk about, the Star Trek tractor beam effect. When you get to one of those big round numbers, it just kind of just draws the stock there, like the tractor beam from Star Trek. So we're getting close enough to where, I mean, the dollar did it. It just feels like it wants to run up and hit that 100 level. So sorry, it's a great looking chart as far as from a trading standpoint, but as far as our wallets at the gas pump, not so positive. So thanks everybody, and thanks to all of you that joined us on the live streaming services. It was great to have you. If you haven't heard me before, sign off the same way every time. Time's the most valuable asset we all have, and we very much sincerely appreciate you spending some of your valuable time with us, and we do our best to make it an informative and educational use of that time. Thanks so much. Take care, everybody. Look forward to talking to you again next week.